Hello and welcome to this week's episode of Conservative ETF Investor. My name is Ken. This is the week of May 20th, 2017. And here is the homepage of Conservative ETF Investor. And once this video is done, I'll upload the current link of this week's video right here. This is last week's video. And here is our current recommendations. The most important piece of information is that we're still on hold recommendations. You can get to this right here on our recommendations on our homepage, as well as just clicking right here on current recommendations. So that's another way to do it. So the S&P 500 is on hold, and as an example, you can see that our current posture is on hold. You can see our recommended transaction date for a buy was on November 7th, 2016. The price on the transaction date, the current closing price, and what that profit and loss is in actual dollars and in percentage. So this way you can keep track of what's going on. And then this is our beta of each one of our ETFs, and this is our portfolio beta down here, 0.63. So we are conservative investors, hence the name Conservative ETF Investors. Okay, so that is our postures and our current recommendations. Now we're going to jump right to the charts. Actually, before we get to the charts, let's come over here, and you can see that our portfolio is up since our buy recommendations, a total gain of 13.4%. And our $100,000 portfolio is turned into $113,000. Okay, so that's where the portfolio stands. Now let's go over to the charts. We're going to start with the S&P 500. The symbol is SPY. We are looking at a weekly chart, and for all of our symbols we look at weekly charts. We like to use the weekly charts because the daily charts have too much volatility and they're short term, and we have a longer term view of the market. We're not trying to be traders, we're trying to be investors, and that is the difference, and that is why this is the product that we use. Okay, this is a 5-year duration is our time frame, and this is weekly charts. Each bar represents 1 week. That's what these bars represent. The S&P 500 is in a rising wedge pattern. We're smack dab in the middle of that rising wedge pattern. So that's where we stand with there. Let's go down and look at our momentum indicators. Now, the S&P 500 on the MACD, which is the top momentum indicator, has reached a very high level where it went above 6, which is a very high level, and it has since backed off of 6, came down. Then the S&P 500 right in about here started to show some strength, and it popped back up. You can see it right here in the chart where it popped up. That's what I'm looking at right there. So where that popped up is where the MACD black line, where it fell below the signal line, then it went sideways. You can see it here in the thumbnail well. Went sideways, tried to penetrate above that signal line, but crossed negative and now is lost momentum and is heading the other way south below the signal line. It is still in a very high territory. These are negative signals indicating that there is troubled waters ahead for the S&P 500. Now let's go down and look at the slow stochastics indicator with default settings. We have, let's see, have we technically, yeah, we've technically gone now below the signal line. You see the black? It's at 88 and the signal line is higher at 89. So we've crossed below the signal line and we are in overbought territory, and we are probably going to be coming down. So that is what the S&P 500 looks like. So as a trader, you might want to take and reduce risk, but as an investor, the chart, it's still in a rising wedge pattern and hasn't broken down below this support level right here. If we were to start breaking down below that support level, and with the MACD still being in this very high range, then that would be a signal for even us conservative investors to exit out of the market. But right now, the pattern hasn't broken down enough. So that's the S&P 500. Now we're going to go and look at the NASDAQ 100. The symbol is QQQ. Again, we're looking at a weekly chart. Let's get rid of inspect. And what is happening here? You can see that for the week, the NASDAQ 100 has lost 0.55%. And we were in a rising wedge pattern similar to the S&P 500, but the NASDAQ 100 was so strong it broke up above it, and it is still above it, which once acts as resistance, now acts as support. We know that let's go down and look at our momentum indicators. Let me move over so we can see the thumbnail. Okay, now the NASDAQ 100, which is above, it's on the MACD, which is above its signal line, came down, bottomed, and stayed above it. That's a very bullish sign. But look at the level. The level of the MACD is 4.851. These are very heavy, hefty levels for this indicator. In the last 5 years, this is the highest this indicator has been. It looks like we've reached some type of a blow off, somewhere between this range here and this range here. So, I mean, it looks like there's some froth in the market that it wants to take off. On the slow stochastics, same thing as the S&P 500. We're below its signal line. You can see it there numerically, and here you can see it in the thumbnail. So we've lost momentum on the NASDAQ 100. The expectation is going to see how it holds up against this support line, but I don't think this support line is going to hold. I fully expect it to drop below that support line and at least come into the 17-week blue moving exponential moving average. At least come into that, if not come down and touch the 43-week, or if not come down and touch this lower support line. All we can do is wait and see. But technically, it's still strong. I mean, it's just showing that the ETF price pattern itself hasn't broken down. We haven't dropped below the 130 level, that support level right there. We are still maintaining, this strong uptrend. It hasn't broken down, but the signs are beginning to reveal itself. We're going to move on to our next one in line, which is the Russell 2000. Here's the Russell 2000, symbol IWM. We've lost 1%, 1.08% for the week. Now, on the Russell, you can see that what we've kind of went sideways. We've been in a sideways trading pattern, for a while now, for a long while now. We've been in this rectangular box pattern here. There it is, a rising trend channel. We're touching and kissing this bottom rising trend channel. Out of the major indexes, the Russell 2000 has been the weakest. It is trading now right touching that lower trading trend channel. And you can see that we're right at the 17-week EMA. The 17-week EMA is 136.05. We are trading at 136.03. We are right there at the 17-week EMA. I suspect if the other indexes begin to fall down, this is going to continue to fall down and at least come down here to the 43 exponential moving average. So I suspect that that is going to happen. But we're still in this rising trend, and that's why we're still on hold signals. We don't see major signs of deterioration. Let's look down here at the indicators. Now you can see that your MACD is, clearly below the signal line, and very similar to the S&P 500, tried to come up, go towards it, but before reaching it has since turned away and has still lost momentum and is now traveling further away from its signal line. It is softened up nicely though, because we were at this high level here, which was above 4, and now we're at 2.478. So we are coming down, which technically is not a bad thing for that to come down and soften. And the ETF itself has just moved sideways. That's actually a bullish way to lose and bring that momentum back down, so it can have another upswing. So out of the choices of the ETF either coming down and crashing, and also the MACD crashing with it, or moving sideways, or another way that the MACD can also lose momentum with the ETF going up is when it goes up slowly and steadily. At that point in time, you can see here that the momentum came down, but here where it came down and actually lost price percentage is when you got the most of negative on your MACD. Okay, so that is the Russell. Let's move on to the next ETF in line, which is VEU. VEU is the Vanguard All World excluding United States ETF. So here's your diversification getting out of the United States. Positive 0.88% for the week. Look at how strong this ETF has shown. It went above its rising trend channel in this rising wedge formation, and there was a declining tops formation, rose above that. 3 weeks now, it's still holding, still doing good. Let's go over and look at the momentum indicators. The MACD, look at that. Didn't get below its signal line and is coming up. And although on a 5-year basis, it looks like it's high, and it is high over a base of a 5-year period, these numbers compared to the other indexes are not that high. What else? The slow stochastics. It's lost momentum, starting to travel sideways, but it's above 80, which is still a sign of strength. And the ETF has not broken down. So that's why we're still on hold recommendations across the board. TLT, what did you do? You went up 1.91% for the week. Excellent week for TLT, your 20-year Treasury bond funds. Now, look at your chart pattern. You have a declining tops resistance line right here. We came across it, 4 weeks ago, right there, and we didn't even get to touch it before it came back down. Found support here on this trend line right here, which was a declining tops at one time, which once acts as resistance, now acts as support. It bounced off of that previous declining tops resistance line. Now it's a support line. It bounced off of it, came back up. What a strong week. But we are right here against this declining tops trend line. This trend line has proved to be impenetrable for a long time, since somewhere in 2016, after July, August of 2016. You see that that's where it began, and that's where it started, and it has not penetrated that yet. As a trader, you could exit out of this position right now and see if it can get above it. If it can get above it and close and stay above it, you could re-enter your position, losing 0.5% or 0.75%, knowing that it broke above that. But if this trend continues, and bounces up here, touches it, and then comes back down, you would save yourself that profit. As an investor, we have a buy point here on December 27th, 2016 with a buy point of 117. We're currently at 123. So we're going to stay in this as an investor unless we break down and get below this support line here. Definitely below this support line, we would clearly be out of this ETF. But for right now, we're on a hold recommendation to see if we can get above this. That is TLT 20-year treasuries. Moving on to the next one. Okay, now let's go through VNQ, which is our Vanguard Real Estate Investment Trust. And we have gone up 1.12% for the week. And look at the chart pattern on VNQ. We have a declining tops. We broke above it, but once it hit this resistance line here, which was from this previous peak, could not penetrate that. Came back down, broke below the declining tops line, but it looks like it's bouncing off this support line just above 80. So right now it's trading at $82.19, and it looks like it's going to hopefully continue to go up and go from there. Okay, now we are going to look at our gold ETF, precious metals, symbol GLD. Okay, on GLD, you can see the declining tops trend line right here. We came up, kissed that declining tops trend line, backed off, found support at about 115, and then has gone up, risen above this shorter term resistance line, is trading above it, and is now in between these two lines. We're waiting to see which direction ultimately gold is going to go into. As far as the MACD goes, you'll see that we came down off the highs, but we've softened up greatly and now is traveling parallel with the signal line. So it's right at zero. So this can truly go in any direction. Depending upon which way it's going to go, it should probably continue to go in that direction. So in other words, if it breaks out above this declining tops trend line, and if it can clearly get above this bar right there, that would be extremely bullish for the gold to continue to rise. But we're still on a hold recommendation, and we are on a wait and see on gold. Now let's go over to our volatility indicators. Our first one is the VIX, which is for the S&P 500. And you'll see here that volatility has, now the chart pattern is different. We no longer are on weekly. We go on a daily chart for our trend pattern. The time frame that we use is 1 year as the time frame, okay? So now we look at our volatility indicators not on weekly charts, but on daily charts. And we use a couple of exponential moving averages. We use the 50-day EMA and the 200-day EMA. 50 is still below the 200. It was starting to come up towards it, but has since softened greatly. The index came up sharply when the stock market was going south, but has since backed off. Here you can see it's right where that dip happened in the S&P 500. This is a price trading pattern for the S&P 500. Right where we came down right there during the week, well, that is when the volatility comes up. So that a higher volatility is an indication of lower stock prices as well. You'll see here on the MACD momentum indicator, momentum is now going towards the high side, which is an indication of more riskier in the stock market. Okay, so that's for the S&P 500. The next volatility indicator is the VXN, which measures the volatility for the NASDAQ 100. Now, what do we got going on here? Pretty much the same thing. The index has traveled strongly above its 50 and 200-day EMAs, but has since backed off. and is now riding right in between both of those two indicators. But there is compared to this range over here, we've definitely come up in volatility. It's just a question of whether it's going to stay down and back down, or exactly what is this going to do. So that pretty much wraps up our this week. This is Ken signing off and wishing you great trading. I'll see you later.